Hello and welcome to today's video, where we'll be discussing the recent decision made by the South African Reserve Bank to raise interest rates by 50 basis points. While this move will undoubtedly put pressure on debt holders, there are definite positives to the move, according to Talia Pitasis, portfolio manager at Allan Gray. One positive is that the higher rate makes South Africa a much more attractive destination for investors. As the South African money market is becoming a saver's haven, the overnight repo rate is currently at 7.75%, the highest level in almost 14 years. This makes South Africa more attractive to investors than Mexico and Brazil, with interest rates of 11% and 13.8% respectively. Another positive is that it shows that South Africa's central bank is not asleep at the wheel when it comes to executing its mandate. The South African Reserve Bank has been taking decisive action to tackle high levels of inflation, and hasn't simply been muddling along or playing catch-up with global markets. Key to the decision to keep raising rates has been the dismal state of the country's trade balance, which measures the value of exports, less imports. A trade deficit or current account deficit implies that more currency is being spent via imports than those brought into the country via exports, requiring foreign financing to plug the gap. This requires the SARB to be sensitized to the factors that drive foreign capital flows into the country, one of the most important of which is the attractiveness of SA interest rates as an investment destination. South African banks remain well capitalized, hold sizable buffers of high-quality liquid assets, and have large interest rate hedging programs alongside robust risk management practices, making them less vulnerable than U.S. regional banks that have found themselves in troubled times. This has given the SARB room to act independently and also focus on local factors, instead of simply following global trends. While some may comment that South Africa simply follows the interest rate moves of the US, the SARB actually began hiking interest rates more than a quarter ahead of the Fed back in 2021. It remains sensitized to the level of South Africa's real rate of interest within the context of global financial rates and retains independence of thought from offshore central bank players, acknowledging the risks of inflation persistence. Overall, while the South African Reserve Bank's decision to raise interest rates will put pressure on debt holders, it also brings several positives. It makes South Africa more attractive to investors, shows that the SARB is taking decisive action to tackle high levels of inflation, and gives the bank room to act independently.